my favorite dividend stocks, or some stocks that pay really good dividends that I would buy. So on the Canadian side, Canoa EIT Income Fund is a stock that I would buy for the dividends. It's trading right now at 11.9, but the 52-week range is between 11 and 12. So if it gets closer to 11, I'd definitely buy some. And let's look at the dividend rate it pays. So the yield is 10%. And it pays 10 cents per month. So let's say you put in $1,000 in this stock, and let's say you were able to buy in at $11. It's going to give you 90 shares. So every month with $1,000, you're going to be getting 10 cents per share. So you're going to be getting $9 every month if you put in $1,000 in that stock, and if you buy it at $11. Now this is a mutual fund that buys that holds several stocks. Here we can look it up. Here are the top 25 holdings of this mutual fund. So as you can see, it holds big names. So now some people like mutual funds because it's diversified. But the reason why I don't like mutual funds is because you buy into all these stocks not exactly at the right timing, not exactly at the right price. So let's say you have the first three that are well priced, but then you have Microsoft that's kind of expensive right now. Well, because you're buying a package, you're forced to buy the other stocks at the price that it comes with. But when you buy stocks individually, you get to pick and choose. You get to decide when to buy, at what price. So you get to benefit more from the fluctuations of the stock, from the movement of every stock. But the advantage of this mutual fund is that it does all the research for you. It bought in some good stocks, and it pays a monthly distribution, a monthly dividend. And if you look at the stock performance, it's been hovering between 11 and 12. It's pretty stable. Let's look at the chart. If you look at 1 year, you can see here the lowest is like 11.13, 11.10. Highest is 12. 2 years, 10.50 to 12. So it's always hovering around that price. So if you can get in at 11, that would be perfect. And you're collecting dividends every month, which it comes up to 10% per year, which is very good. Now let's see what is the expected payout, because sometimes the dividend rates change. Sometimes they don't pay what they paid last time. So as you can see here, they've been paying 10 cents per month since 2009. And before 2009, they were paying 15 cents and then 21 cents. And in 2003, 2004, they were paying 63 cents. So they've been paying dividends every month since 2003. So it's pretty fair to say that it's a consistent payout. Or obviously right now they're consistent on 10 cents per share. So this is definitely a stock that I would recommend to buy. Personally, I would buy it closer to 11 and then just hold on to it long term and collect 10% per year without doing anything. So another great dividend stock, but on the American side, is New York Mortgage Trust. It pays about 13% here, 12.92% per year. Pays it per quarter, pays 20 cents per quarter. Now, as a Canadian, if you collect dividends from a US stock, you get taxed. It's a small portion. So instead of getting 13, you're probably going to be getting 11%. So it's still not that bad. Still a great stock to own because the price is relatively low. Personally, I've bought it at 6. If we look at the charts, it went all the way down to 520 or 530. If we look at 3 years, though, it reached 7 and 8 and even 9. So below 6 is a relatively good price to buy in and collect 11% per year. New York Mortgage Trust, this is on the NASDAQ, on the US side. Now let's see how long or what's the expected pay. So yeah, in 2016 it was paying 24 cents, and now in 2017 it's paying 20 cents, but it's been paying it pretty consistently since 2004. Dividends payout have changed, but at least they pay it every 3 quarters. They've been paying it every 3 months. They've been paying it. So from 14 cents, 16, 25, 18, 22, 27, 24, 20. So it's a little bit more consistent now, but as you can see, it changes a lot, but it's always around the 13% per year rate. And if anything, if you buy it at a good price below 6, you can always sell it when it goes up to like 7 or 8. So there's 2 ways to make money from this stock, is by buying low and selling high, and just by holding and collecting dividends. Another real estate investment trust that's good to buy is Annaly Capital Management on the US side. Annaly Capital Management, NLY. So this pays 11.54% per year. And if we look at the charts, it's relatively low. I think at 10, it's a very good price. So 3 years, it's been hovering between 9 and 12. 5 years between 9 and 14. So it was higher before. 10 years, it was at 18. So you can see here between 2009 and 2013, it was at 18. So since 98, The highest it reached was 20, and then in 2008, of course, it dropped with the market crash. It dropped to 14, and then it went back up to 17 the years after, and then it dropped again now to 10, and it's trading went up to 12, and now it's trading at 10. So just based on this chart, I would get in at around 10 and just hold the stock as long as you can and just collect the dividends that it pays every 3 months. So every quarter pays 30 cents per share, equivalent to 11.5% per year. So it's been paying 30 cents since 2017. Actually, it's pretty consistent since 2013. So 2013, 2014, 2015. So since 2013, it's been paying dividends consistently. And the next payout is April 30th if you've been holding the stock before March 29th. So they haven't declared their next payment yet, which should be in 4 plus 3, 7 in July. But they're probably going to declare it mid-June. So they're going to declare it mid-June, and you have to be holding the stock before end of June, and you're going to get paid July 30th. You'll be getting 30 cents per share. Now, this is a mutual fund company that I like that pays very good dividends, and their most common stock is DFN. It's the most consistent one in terms of dividend payout. Or if you look at distribution, so it's from a company called Quadravest based out of Toronto. So as you can see, it pays 10 cents per share. So it's got two classes. It's got the Class A and it's got the preferred shares. For the Class A, it pays 10 cents per share. So the Class A has a higher dividend rate, but the preferred is safer in terms of the stock. So it's been paying 10 cents per share consistently every month since inception, since March 2006. And this 10 cents per share represents about 11%. Here, let's look it up. Yeah, it pays about 11% per year. 10 cents per share consistently every month. So that's very good. And if you can buy it at around 10, if you look at the charts, it's a stable stock, doesn't move. So 1 year it's been between 10.25 and 11.2 or 3. 2 years it's been trading between also 10.5 and 11.5 about. 3 years it dropped once all the way down to 7. That now whoever got in at 7 is super lucky. But besides that, it's been around 11. 4 years, 12. 10 years. So it started off in 2008. It dropped all the way to 6 or even 5.5. So obviously, any stocks you bought in 2008, you're making money off right now. But as you can see, it's pretty stable and it's usually around 10. So if you can get in around 10 and just hold it long term and just collect 11% per year, it's amazing. And this is a Canadian stock, so you're not gonna, if it's in a TFSA, you're not gonna get taxed. And the only issue with Quadravest, though, it's a mutual fund that, if you look at the Class A shares, it says on termination date of December 1st, 2019, although it's subject to further 5 years extension. So obviously it always gets extended, but it'll pay holders of Class A shares the difference between the net asset value minus $10. So right now, if you buy the stock at 10 and then the mutual fund terminates, because you're a Class A holder, you're going to get $8 for it and not the $10 that you paid for it. While the preferred shares, they get their $10, but they only get 5% per year dividends. While the Class A shares right now they're getting 11% per year. So that's the only risk with this mutual fund. But if you look at the past performance, it's always been renewing and it's been paying the dividend every month since 2006 or 2003. And these are the stocks that it holds. So very, very safe stocks. All the banks, insurance companies, Enbridge. And it's able to pay these distributions by selling covered calls on the stocks that it holds. So I would look into Quadravest, and maybe it has lots of funds, but DFN is the most. So these are all the funds that it owns. But DFN is the most consistent one they have with 11% dividends. So if you're looking for dividends, these are some stocks I'd consider. And also, there's many real estate income trusts. So I'm gonna search for stocks that pay at least 5% dividends. Let's say 5% per year on the Canadian Stock Exchange. Search, put it in order of highest dividend. So you've got Chorus Entertainment Inc. that pays 17.59%. This is too good to be true. So you have to research the stock and see why it's able to pay 17.59% and is it consistent. And I think it just started paying it 2 or 3 months, and it pays it every month. It's an entertainment company that owns all the big channels like Global and YTV and HGTV. So it's not going anywhere, but will it be able to pay? How is it paying 17%? That's very high. So I would look into that. Then you've got the Financial 15 Split Corp, the Dividend 15 Split Corp. So this is from Quadrivest. As you can see, it pays high dividends. You got the Canoe EIT Income Fund. You've got American Hotel Income Properties, Real Estate Investment Trust, pays 10%. And after that, we're dropping below 8% dividend per year. Now, Enbridge is a great stock that pays, right now it's paying 6.48% dividend. This is a great stock to get in. Stock itself is well priced and it's paying really good dividend. So yeah, as you can see, there's a lot of good stocks that pay good dividends. Just a matter of seeing how consistent are they with paying their dividends. Personally, I just look at how long they've been paying these dividends and what their operations are, how likely they're going to continue paying their dividends by looking at what they operate in. So a mutual fund that holds really big names, that's usually pretty safe. A stock that is on the top 5 biggest market cap on the Canadian Stock Exchange and that owns almost all the gas-related operations in Canada, that's a stock that you can trust. So if you have any questions on how to find good dividend stocks, leave them in the comments below. So I use Investors Edge and Questrade for trading. If you can open an account with Questrade, you can use my referral code at the bottom of the video, so we can both get up to or between $25 and $250, depending on how much you start off with. Alright, thanks for watching.